What a week in the markets. We've got headlines flying from every direction and price action to match. So buckle up because we've got a jam-packed episode here for you folks. We've got news out of the CME on Monday announcing plans to launch Solana futures, yet another sign of growing institutional appetite for crypto exposure. Meanwhile, XRP catches a major break from the SEC officially dropping the lawsuit against Ripple's executives, which is a big win for crypto regulation clarity. Then of course all eyes were on the Fed this week as the FOMC meeting wrapped up with rates remaining unchanged, but the market reaction was anything but flat. We're also heading into the final stretch of Q1 here in 2025, which is always a pivotal moment for both traditional and crypto markets. And we can't forget the Digital Asset Summit in New York City, where Trump made headlines not just for his brief pre-recorded speech, but for the hype around a major crypto announcement that didn't quite land. Instead, Bitcoin actually dropped shortly after. Was that a coincidence? Maybe, but we'll take a look at the chart and let the price action speak for itself. Oh, and let's not overlook Trump's new proposed tariff, which is rumored to take effect on April 2nd, that could add another layer of volatility as we head into Q2. We're covering it all today: Bitcoin, Ethereum, SUI, APTOS, and yes, the S&P 500, or aka the SPY. So grab a cup of coffee, whether it's hot or ice, because we're breaking it all down right now. Before we get started, a quick shout out to our trusted channel partner Coinbase. If you're just getting started in crypto or you're looking for a reliable exchange with a wide range of assets, Coinbase is a great place to start. I've personally used them as my main on-ramp and off-ramp since 2017, and they've only continued to improve over the years. It's remained the #1 platform I always recommend to friends and family when they're ready to take the first step into crypto. If you're interested, please use our link in the description and you can get up to $200 in crypto to kickstart your journey. As we look at Bitcoin here, really nothing has changed too much since the last time we've updated here. The key line in the sand as far as any sizable downside from here remains staying above and holding and closing above that $80,000 level, which is the yearly pivot, the average of price of last year, or aka the 365-day non-moving average, that as long as we're holding above, we can anticipate more upside. And if we were to start closing below that $80,000, that's when we start to get a little bit more on the bearish side and probably anticipate a more sizable correction to come. From here, personally, I'm looking more so on the side of we get at least a relief rally, probably back towards 90 to maybe 96, $98,000. And these are the reasons why. I'll break it down a little locally here, which is what we saw over the course of this week. And basically, I look at the previous week range just about every single week to kind of justify the shorter term, midterm, where we look for the next week of price action that we may see. And essentially, we started off right around $83,000. We had a previous week range, which for anyone that's new to my technical style of analyzing and trading, I utilize the fixed range volume profile quite a lot, and I utilize it both on a time base as well as structural basis as well. So when looking at last week's range, which is this area, generally when we begin inside of a range like this, we tend to see a little bit of range bound activity. Realistically, just is exactly what we saw this week. We also had a weekly pivot, which was the average of price of last week, likely to be met this week. Once again, these averages tend to be met in the following session. So we have these each and every day, week, month, quarter, 6 month, etc. And when we began this week, we were trading around $83,000. We had a range high of about $84,000, a range low of about $81,000, and we had a weekly pivot, which was the average of price of last week. If you were thinking of a mean reversion, similar to a moving average where the price tends to return to those areas, and that level was right here at about 81,500. So we began the week, we ran to the range high, we dropped down to our weekly pivot. This was around Tuesday afternoon, day before the FOMC meeting. We got a nice rally back up towards about $87,000, and then we got a drawdown into this region here back to about 84,000. So locally, some normal price action as we begin the week, and we are now ending around Friday here, obviously, where we are trading around this $84,000, $85,000 region. Now, a little more locally here, we see we had that rise from the weekly pivot up towards our high that we put in around that FOMC meeting, and then we've gotten this retracement here. And so far, if we were to take a Fibonacci retracement from that low to that recent high, we'll see that we have a gold pocket retracement area, that 618 to 65% retracement zone that does come in around 83,000 to 83,500, and then there's a daily naked point of control here. So if I was to pull up the daily range from, I believe, 2 days ago, there was a point of control that has not been retested yet, and that is known as a naked point of control. Untapped point, naked untapped point of control is a better another way to look at it, I suppose. A key volume region nonetheless. And we slightly front ran this region down below when we dropped down earlier yesterday. So I imagine we actually will come back down, probably take these lows here. A daily trade setup that occurs at this point. When you come down, you sweep the previous day low, especially when you front run two key regions like this. And once again, many traders are getting into positions probably around the price action that we are now. They're going to sleep, at least here in the US, and they may wake up to get stopped out and then only to re-enter their position once again, right? Because we front ran this region. In my opinion, I think that it's likely we come down to it. No guarantee that that's where we get a bounce from. Maybe the low is already in right here locally. And of course, maybe we just cut through this region and start to lose some of this ground we've regained, and we have to reevaluate at that point. But for today, for Friday, for March 21st, I would imagine we probably do see something along these lines where we come down, we fill that gold pocket, we meet that daily naked point of control, we take out these lows here, and then we look for that rally up to the upside. It is going to the weekend, so it's a little tough to call, or not necessarily call, but it's a little tough to know that obviously if we're going to see a sizable rally from here. But overall, I'm anticipating if we're seeing some strength out of this region here, even if we just get a little bit of continuation from where we already are, the next major area for me is going to be up at that $90,000 area for Bitcoin. And not only more so on the smaller time frame, if we actually zoom out just a little bit here, which is not necessarily a macro outlook by any means, but we're starting to put in a potential reversal here as we have a low, a high, a higher low, a higher high, higher low, higher high, potentially a higher low here as well. And once again, looking for some strength and most likely a rally up to the upside here. And now taking this one step further here, once again, we're coming into the end of the quarter, which I brought up at the beginning of this quarter, the importance of that previous session and essentially what we were looking at with that previous day range or that previous week. Every session that kicks off, we have that previous data that is very relevant during that next session. So the previous quarter relevant during this quarter, previous month, this month, previous week, this week, so on and so forth. And I'll hit on this once again. When we started Q1 of 2025, this was our previous quarter range. So this was Q4 of 2024. We started off trading around this region. Once again, put in a nice bearish harmonic reversal pattern up here, took the highs also, and then we just slowly have rotated this range down to the lows here. Yearly pivot was also located right around this region, untapped at the time, which made this a really key region and more than likely that we would come down to in the near term. And so far we have seen that unfold. Now for me, once again, once I see a session end, doesn't necessarily have to be a quarter, but when we're coming into the end of a quarter such as the one we are now, and we've pretty much just seen nothing but down only, that really does lead me to believe that we are going to see at least a recovery to some degree, a relief rally if you will, and that is going to give us a little bit of leeway here, at least in Bitcoin, more than likely a decent size in the altcoins if that all does unfold. And this is what I'd be looking for as we walk into quarter two of next month, basically, right, as we walk into April. So this is our current developing quarterly range, which is going to close off here in about 9 days. So I highly doubt that anything's going to change drastically unless we had a huge dump from here, or I suppose even a huge pump. But more than anything, I imagine we probably will just range around in this region. We may get that rally up towards that $90,000 weekly naked point of control, that volume level that I'm targeting here at the moment. Maybe we get a pullback from there. Ultimately, I imagine we're going to close this quarter probably below $91,000. And if that is the case, what that opens us up for is very similar to what we had last quarter, where we have now a huge range above us, unlike last quarter or this quarter as we opened, we had a big area down below us essentially, but we have a lot of things up above us at this time. So not necessarily meaning that we're going to just blast off to new all-time highs, but it does at least indicate that we're going to see a move back to the upside in the form of a few weeks of green. And assuming that we do breach into this range, most likely we will seek out that point of control, which is this area right here that's protruding, the highest volume areas that are coming out here. This is the number one area that the most volume took place, which is where price will seek out once entering a range. And that does come in around $96,000, $97,000. which is also just about our gold pocket. If we were to take a Fibonacci retracement from the overall high from January 20th to our current low down here, you'll note that that is also where our gold pocket retracement for the Fibonacci tool is coming in, essentially meaning that we would see a retracement of 61 to 65% of the current drop, not necessarily of price action in total, but that would be a very natural regression back to a region where we'll have to determine if that is going to be, if we see it, of course, that if that's going to be an area we see either a huge rejection from, because that could set up a sizable pullback. And I'm talking sizable. More than likely, we probably see back into the 60K area. And on the flip side, if we were to actually push through this region, this is kind of the key area I'm looking for to see that push back up. We'd look for the range rotation at that point. $106,000 would be on the docket, and we'd reevaluate things and look at the context of the market once again at that point. So the key takeaways here, folks, is hold 80,000 on the weekly and daily closing basis as we've been doing, and with more than anything, I imagine we see at least upside back towards $90,000. We start next quarter potentially below that region and we breach into that $91,000 area. That's going to be entering that previous range. More than likely, we seek out our point of control up towards about 96,000 with our golden pocket area as well around that 98K. But that is the key region we need to pay attention for, because no matter what the news is at that time, no matter what is going on, that is a heavy technical area where we need to pay attention for either a sizable reaction to the upside or to the downside. Either we need to pierce right through it, claim it as support for more upside, or that's the key region where if we do not see that claimed and we get a huge rejection from it, that will set up a sizable rejection, in my opinion, down towards $60,000, $55,000, maybe even lower. Now, Ethereum has pushed up just a little bit recently into that $2,000 region after trading and trending right around that $1,800 zone for the last several days. We are currently holding the key level that I'd like to see us hold. Similar to Bitcoin, that $80,000 year pivot is key for holding and seeing more upside. For Ethereum, that same level equivalency is about 1976, and realistically I'd like to see us get back above that 2024 low, which sits about $2,044, realistically $2,000, right? That nice rounded number. If we start to see some strength around this region, which I do think we can see here, the next major target is the 382 retracement, as well as a monthly naked point of control sitting at about $2,700. That's the next major line in the sand for Ethereum as far as upside would go. If we were to start coming back in this region, however, we did front run a major area when we came down to that 1750 just a couple weeks ago, and it is that 1670 level. So 1670 is still something I'm highly aware of. And honestly, even if we see it push all the way back up to here, we still are at risk of putting a lower high, coming down to make a lower low in that region. But it is something that we will have to monitor and manage along the way here. For now, I'm looking at Bitcoin once again, probably taking a leg up. Most of the market's going to come with it. So if looking at Ethereum as well, we're reclaiming some ground here, which is exactly what we want to see. This is the daily time frame. We're reclaiming some high time frame averages. As long as we're holding those on daily time frame, I would imagine we get that push up to 2,700 in the near future. Now, Sui is a newer project that's had a lot of traction over the last, I'd say, year here, and we had a really sizable move to the upside. And then realistically, just taking a simple Fibonacci retracement from the current low to the current high gave us this gold pocket area, which I did, kind of box off here because it was added on with a little bit of more confluence with a quarterly naked point of control as well as a monthly naked point of control. Once again, these are high volume areas that likely to be returned to, especially if we re-enter those ranges. I don't have them pulled up right now, but I do highlight those key levels, especially when they align with other areas such as golden pockets or just in general, some other key region that we're looking for. When there's a stack of those in the same area, I tend to pay attention to it. And we got just that. We got a nice retracement right into that key area here. So far, this has been several days. Once again, daily time frame here. Several days we've seen a slight bounce out of this area. If we were to see continuation from this region, I'd be looking for a move back up and just taking this level by level. We're going to take a Fibonacci retracement from the high down to the low here. That puts us at around $4, right? And right now we're trading at $2.35. That's a very sizable move up, especially from that lower area, almost 100% if given. And then as well, we have a monthly naked point of control up here. Honestly, if Bitcoin was to get that push up to like 96,000, 98,000, Ethereum to 2,700, I could see the altcoins getting at least minimum a relief rally where some coins could do some of these moves here. Now the key area does remain basically where the low is currently, and if we were to lose that, obviously we have some more areas down below us, but for now we're holding support. We have to anticipate upside. Bitcoin looks like it wants some more upside. Ethereum looks like it has some upside. I do imagine that we get a push back up to some degree here, and these would be the next two major targets locally that I'd look for in the short to mid-term here on SUI, which is back at $4.09 to $4.20, up towards about $4.80. I'm going to take a look at Aptos here in a second also. And what I like about projects such as SUI, Aptos, Ondo, really there's a vast majority of them, but anything that's available on Coinbase, realistically, something that's really an easily usable exchange, an easy on-ramp, off-ramp to the masses, I tend to see a lot of utility in those projects with the potential for upside. And not just because of hype or anything that would come into it, but when these areas start to really take off, and when you see the technicals lining up with some key regions and anticipating reversals, and you can anticipate where people would come in and be able to get into, projects like this really catch my eye. And honestly, Aptos is a very interesting one to me because unlike some others which have just seen some sizable moves to the upside, yet they've seen some pullbacks, don't get me wrong, but we've seen nothing but a really sizable range here. And the last time I've seen a range like this, the last few projects that at least come to mind was XRP, XLM, Chainlink, all before they had sizable breakouts. Now, there's no guarantee that we're going to see one, of course. When I'm looking at some projects where I'm looking to put on some risk into, there's times where you have those movers that are, getting that huge run to the upside. They're pulling back maybe to a gold pocket and what have you. And yes, sometimes that's 30, 40, 50% pullbacks into key regions before continuation. And sometimes when the momentum is going, that's something that may entice many, including myself at times. But I also do like to look for things that have a little bit less risk in the sense of they're trading at the lows or they're trading at regions that are probably unattractive to most people. Maybe they're not even looking at. And that's currently what Aptos looks like to me. So we're trading, and this once again is a mid to long term idea here. This is spot ideas. This isn't like leverage 100x, anything of that nature. Altcoins you don't need any leverage with. Honestly, you don't need any leverage at all anywhere, but this is an idea that yes, we could go another 10, 20, 25% down, and that just kind of is what it is. You have to be prepared for those moves in this volatile market. But at this point, we are at levels that are almost, like I said, to the lows of what we've ever seen here. We're at the low side of the range is where I at least look to put on risk, and you look to de-risk at the high, and then of course look to reevaluate if we were to break out. But otherwise, if you were to just trade this region as the range itself, you could see here that we've just kind of ebbed and flowed the whole way through. And for me, Aptos looks like it's poised for a move probably back up to the range high here. Barring another slight move to the downside here, let's just see what it would look like. Maybe that's 18, like I said, 20, 25%. You could wait for something along those lines, of course. But for what I'm looking at here, I see this as an opportunity to where I do think that this is something that could see it push back up. And if not to all-time highs, just at least to rotate the range. And when I say that, I mean that is we've seen range rotation here. We rotated from high to low, and more than likely we're about to rotate from low to high. And just that move here, we have two key levels sitting right up here. And let's just see where a gold pocket sits. Right in that region as well. This just screams something that has the potential. I won't say more than I'm not giving financial advice by any means, but this just screams an opportunity to me personally. Obviously, do your own research and all those good things. But I do see this as something that could potentially get this move up. Now, if we start to lose these lows and start closing below, I have to reevaluate that, right? So this is not a guarantee by any means. It's always an if-then situation. And right now, we are trading at the lows. I personally would put on some risk at this point, and I would be targeting back up to the point of control, which is $9. We're currently trading at $5.50-ish. And then ultimately, the range high here, where we have an untapped yearly pivot. We have a 6-month naked point of control, and we have the overall, or a local, I'd say, gold pocket, all kind of coming in here like $10 to $11 here, almost 12. So that's about 100% move too, once again, if we have it. And maybe we get a move such as this and we just roll right over once again. But in the next, short to mid term, I'm targeting something along those lines. And then of course, if we do see a sizable breakout, then I think we have a pretty decent run on our hands. But for now, let's just take it level by level and anticipate that move back up towards $9 and then potentially $12 in the near term. I want to finish off by taking a look at the SPY, which is the ETF that's measured against the S&P 500, and correlate this a little bit with Bitcoin's price action as well as even Ethereum at this point, because I do see once again a world where regardless if we see a rollover in the next month or two, or we get a sizable move continuation to the upside. Regardless, I think that either way we have a little bit of upside here as we're walking into the second quarter of this year. And the way that the SPY, Bitcoin, and Ethereum are all aligning right now all give indicative signs of that. So the SPY, similar to Bitcoin, has come down and reached that yearly pivot, right? So that average of price, the 365-day non-moving average from last year that we've once again come down to. You can use this in every asset class. And just look at the respect that we've seen off that so far. A nice bounce back up towards about 560. Does this mean that that's a low? Not necessarily. We could very well see another bounce back up. And then once again, similar to Bitcoin, we have a couple key regions where we need to pay close attention to because we have had a sizable drawdown here. And with these drawdowns come the potential for putting in really just a lower high. And then you have to look for that rollover and then potentially lower lows at that point. And two key areas that do come to mind if we were to see just a complete drop out of this region is all the way down here to 443 and 454. Is that where I'm targeting heavily? Not at this moment. Once again, it's areas I'm highly aware of, but I'm looking and tracking the current price action at the moment. Do have to be aware that that is a possible reality in the near term, and those are high time frame averages that are likely to be met. Doesn't have to though. But where we are right now is you can't get, too bearish at support, of course. We're getting a sizable reaction from here. If we take a Fibonacci retracement and just look at the current price action, we've got a gold pocket all the way back up here at almost $600, so 591 just about. And then if we also look at our developing quarterly range, similar to Bitcoin, we have a point of control that's coming in right about this 604 area. So in my opinion at the moment, once again, we have to take the new data as it comes, but if we were to just kind of trade sideways from here, maybe get a little bit more of an impulse, but nothing crazy on both Bitcoin, on Ethereum, on the SPY, I could see us just kind of tracking up in this region, maybe push up, and then once again, we're going to look at basically 590 up to that point of control, which is about 604, so about that $14 window on the SPY, and it's really going to be telling if we're going to see a sizable, rejection from that area and continuation down, and then turn this into pretty much a downtrend at that point, or if we blast right through it and we get the continuation back to the upside. So currently we're at support, so nothing too wild at the moment. We're probably going to see a little bit of a relief rally here as we walk into Q2, but I will note that the key region at the moment is going to be 590 to 604 here on the SPY, which if you're looking at that in the S&P 500, generally this is, a 10x equivalent. So you're looking at 5,900 to 6,040. And that wraps it up for today's video. If you found value in this content, please be sure to like, subscribe, and drop a comment with your thoughts below or even an altcoin that you'd like me to cover in the next video. Big shout out to our trusted channel partner Coinbase. If you're ready to kickstart your crypto journey, be sure to use our exclusive link below to get up to $200 to start. Have a great weekend, everybody. I'll see you all in the next video. And until then, everyone, cheers.